Being consistent in trading is fucking retarded.
Yeah. Fucking retarded, bro. I don't know how to fucking start this. If you want to learn exactly how to filter out setups, this video is for you. Because we don't know how to fucking start this video any other way.
Most traders think progress comes from taking more trades, adding more strategies, or chasing setups that look perfect on paper. The truth? That mindset often leads to losses, overtrading, and frustration. Consistency isn't about perfect setups. It's about taking the trades that fit your filter and skipping the ones that don't.
All right, let's start going over some of these trades. So this first trade I'm going to talk about is a trade that maybe necessarily doesn't fit the model perfectly, but I would still go ahead and take based on a couple factors. So looking right at 9:30 open, we get a big push, like a big one. And this draw is pretty apparent. Okay, so you can see this hourly close is way up here, knowing that these draws look really, really good. Now, as you can see, not really the best price action when it comes to the 1 minute. But looking at the 5, we have kind of built structure. We've created this order block, signifying that, we probably don't want to go down. We had this hourly close up here, high up into the range. Usually you'd kind of want to see a nice pullback and forward, but on days like this, you really can't expect it. Now looking at this 15 minute, you see that we've made this wick and we still have a significant amount of time left in this candle, around 5 minutes, enough for us to go break even at any of these areas or just when we make a higher low. So looking at this, I would play it like this. I did take this trade. It was towards the beginning of this month. You can kind of expect us not to go under this order block, and you can get a pretty good risk to reward for the way that I trade. So you're basically playing off the bottom of this wick that we created for the next hour, expecting we go up. I would play a little bit wider just in case we kind of mess around, but honestly we shouldn't. So as you can see, we would take an order here, buy 1NQ, stop loss under these lows, take profit up at these highs. Now this was a long trade. You can't expect this trade when we already kind of started slowing down to be a fast displacing trade. So let's see how this goes. Close out right there. And as you can see, it takes us almost 2 hours to hit this, but based on the hourly, this is kind of what we were expecting. We weren't expecting super clean price action, but we were expecting higher lows and higher highs throughout this. Looking at the daily, we can also see that we are making higher lows. areas of price that realistically wouldn't be the best draws unless we got significant close. Now, if we broke this and stopped making these higher lows and closed below here, potentially we could look for this as a draw. But we saw the opposite. This is very displacing candles down here, and we're rejecting them very well. Also tapping it multiple times, multiple times, and not displacing through. Now, let's go. And look at it like this. Now we open up this range, and based on the 15-minute and even based on the hourly at this point, we're still extremely bearish. Not really looking for anything too good. But you have to remember this area. If we're going to look at the daily candle, where are we expecting today to go? Probably to this new gap that we opened at, and potentially even higher. Looking at the weekly, probably up to here, because look at higher low, higher low, higher low on the weekly. So you kind of have to pay attention to the weekly profile. Now in the 5-minute open, 5-minute, can't really tell too much what's going on yet. We do know that we kind of wicked out of this gap, but now we inversed it. Okay. Looking at this 15, this is very bullish at the 15, to the point where, we would probably want to take this looking at the hour, looking at the 4-hour. So what I did, and what I would do again, play bigger stops. We're looking at this on the 15-minute. We're not going to play a 5-minute stop like this. We're going to play bigger stops. We're playing this whole hourly range, expecting us to go fill this new week opening gap. So, even though I take this on the 15, I'd probably go ahead and still monitor it on the 5. What would we do? Stops below here. Take profit up here. On the 5, what do we do? Some pretty good displacement. Enough to where this 15-minute candle close, we shouldn't go back below here. So I would put my stops back to back here and take profit up here. And now you just wait. Let it play out. And that's an extremely good trade. The trades that I take and the trades that I think are most probable are the ones that are playing off, what this week is looking like, what this next day is going to probably draw towards. And I'm looking for, confirmation on some of these higher time frames, 15, 1 hour, 30-minute. And you kind of have to look at it like that when the lower time frame, like the 5, is signifying, that we're going to go lower. Target this high, but even this one up here. What do we see? Off market open. We get a really, really good inversion. And not only that, but we get a tap of that inversion, which, a lot of you guys might take something like this and go break even here, and maybe even take this high. Or if you're extremely aggressive, you would put your stop loss at this low and just expect this high. Now, there's a couple times where this pattern would be extremely good. It would make me want to take this trade in a heartbeat because, we got that displacement towards the draw after we swept a low and are displacing from a gap. But what you have to realize is looking at this 4 hour, we are extremely stuck in the middle of this range. And you can't expect us to go higher, even if there are candles signifying we are, when we are essentially falling back into this range. We would need a displacing candle above this and then a retracement up to here. This is not what we get. We get a good candlestick pattern signifying that we want to draw higher. We have a couple good draws. But looking at this daily, looking at this weekly, what have we done? We've already displaced so much higher through the beginning of this week, or last week. And on Monday, we did absolutely nothing. And you would think that we would be pushing higher, pretty quick on the week if we were going to draw higher. So what happens if you do take something like this, which I would recommend not, is you just instantly get swept on. And as you can see, we're still in this range, and we do end up hitting the draw, but it takes a long time, an extremely long time, so long that we're already 2 days or a whole day past to the next one.
All right, what's up, everybody? About to go over. Hold on, let's see if this. Okay, we're good. All right, we're about to go over 3 trades I took, or 3 trades. I want to go over these 3 trades, right? First one, it was a loose entry with a very clear draw on liquidity. Second one was a trade that I would skip, even though it still looks good on paper, like mechanically it still looks good, right? Third one is one I'd take every single time, but it's more of an aggressive entry, right? So yeah, let's start off on January 21st. This was the first trade I took right here. All right, starting on the higher time frame. All right, daily time frame. I'm still bullish right here, looking for those all-time highs. All right, we swept out, or we take out this low. 4 hour time frame, we hold these gaps. All right, we hold, or we come back down into this gap. Okay, hold up, I went too far. Right here. Okay. Overall draw on liquidity, right? What is it? It's this new week opening gap. Very, very strong draw on liquidity. And looking at the hourly here. Hold up. Okay, this is, all right, that's good. That's way too far. 1 second. All right, we'll start at market open. Market opens right here. All right, looking at this hourly candle. This is how this 10 a.m., well, 9 a.m. for me, but 10 a.m. candle closes all the way up here, right? What did I set my condition as? Is pretty much this, right? You can take this off the higher time frame, getting in earlier over here, but I wanted to see more confirmation, seeing us flush through this high and getting some sort of entry over here to this high. But yeah, I wanted the most confirmed entry. So I was on the 5 minute this whole morning. Market opens. Not yet. Not yet. Okay, market. This is market open, right? We trade into this 15-minute gap. Want to see if we're gonna hold this gap, right? What do? Boom. I think we get a strong close. All right, we get a start. We start pushing back up here. This could have been our first solid entry, right? This targeting back up here. Hold up. Targeting back up to the highs, but I wasn't really comfortable taking entry that early, even though it was pretty obvious, right? So I was waiting for this hourly candle to close. What time is it here? I was waiting. Okay, we get one more strong move. Waiting a couple more candles. Okay, here we go. This is when the hourly closed right about here. And this hourly candle closure pretty much confirmed my whole idea of going higher, right? We completely ran through all of this. My drawn liquidity is over here. Literally disrespected this whole leg down, right? Damn near all the way here. And I was not worried about this hourly gap whatsoever because we literally had this huge move. You think 200, 300 point move is gonna get literally cooked by this small tiny fair value gap. No, that has nothing to do with anything because the drawn liquidity is stronger than this fair value gap, right? And our drawn liquidity is this new week opening gap. Very, very strong drawn liquidity. We also have these highs resting above, right? So hourly closes. What do I wait for? I'm looking for like a very, very loose entry where I could put my stop loss that would be protected, right? We open up this 5 minute right here, right? I'm not looking for a huge retrace. I just want to see some confirmation that we're going to continue holding this bullish order flow, right? What do? We wick into this first 5 minute gap that we created. And I place my first contract right here. I enter in right there. Have a stop loss. Wait, where's the 15 minute? First, I have my stop loss pretty much under here, or it was a little bit above here on this gap. I was expecting this 5 minute gap to hold and these both of these 5 minute gaps to hold. Not expecting us to go back down all the way there. So I do that. Then I wait. We get this weird wick. I'm not in more size yet. Okay, now we retrace back down into this area, looking like we were gonna come tap this 15 minute down here, but we don't do that, and we get a strong move back up here, right? So I add in another contract right here, and I move my stop loss down to this low, seeing as I wanted to see this low become protected and stay protected and not be traded back down there. So stop loss is down here, targeting back at this high. And there you go. It was like 2R on this. It was a pretty good trade. Oh, oops. We play this over. What just happened? My bad. I'll cut that part in a second. All right, so we entered there, right? I entered another contract after this candle. We got filled in around here. And it's turned into a 2R trade, 2.6R, right? Not expecting this 15 minute for value gap to get filled after we get this move back up, right? Just watching the 5 minute, right? What do we do on the 5 minute? We hold this order block here that we create after displacing up. So I'm just expecting this bullish order flow to go all the way up here because since our drawn liquidity is super, super clear, right? Everything is super clear on this trade. So just watching this 5 minute here. Boom. Just watching the 5 minute, literally not a single pullback back down here. Exactly how I expected it, right? Take profit gets hit all the way up there. Very, very simple trade here, right? Just playing off the idea of this hourly candle wanting to expand, right? We make this first hourly candle, we make a little wick at 10 in the morning into that 5 minute gap, and I was expecting that next hourly candle to expand us to our drawn liquidity. Very, very simple trade. All right. This is a very good trade, and a lot of people would wait for like a strong retracement over and around this area, right? We do get this 5 minute tap, and I think that was more than enough, but I played a bigger stop on the first 5 minute tap since we could still retrace to the 15 minutes, so I played it pretty much under here. All right, it was like 1-to-1 or whatever. We got a stronger move out of it, then entered more contracts, move stop up, expecting this low to be protected, and that's exactly what happened. All right, going over January 13, right? This is a trade that I would not take for one main reason, right? Looking at the 4-hour time frame, we are clearly bullish, right? Respecting bullish, very, very strong bullish structure, right? Wanting to see these next highs above, right here, right? Let me go skip a little bit more. Okay, this is our news candle that was created at 8:30, right? So going into, okay, 9:30, what happens, we have this 15-minute gap that's created in the morning. Okay, we want to see this high, or most people want to see this high. What happened was we tapped the 15-minute. Okay, we get a strong push above. Most people would just enter off of this inversion, right, with the 15-minute gap, right? Gap tap, stop loss at the low, targeting this, right? You can probably put a smaller stop. There we go. Boom. Just like that. See what happens, and you get edged and you lose. And what happens there, where do we deliver to, is our data low from CPI, right? So one main reason you do not want to be targeting this high is because this is not our data high. Why is this not our data high? Because our data high is on the 1 minute time frame, right? What happens already? We already took this high out. We already took the data high out. So this is an invalid data high. You don't want to be targeting that data high. Look, this is our data low. This is where you would want to target, right? What did we also do when we did when the 8:30 wick was made? We took out this high, right? Took out the high, rejected it immediately. Don't want to be targeting highs that are immediately rejected, right? Because it would be a sign that we could reject them again, right? Rejected this high, swept the high, immediately displaced the opposite way, right? So this is invalid data high you wouldn't want to be targeting, okay? We do get pretty much everything, right? We get our inverse or whatever, every single thing, target the high, but we fail to even reach that high. Why? Because we edged that high and it's not even our data high anymore, right? There's no reason for us to even take it. We don't have to take it. Why? Because our drawn liquidity is what? This data low, and rebalances range back down, right? What do? We end up going all the way back down to the data low, and see what happens. We do not end up going back to that data high yet, just because this high is probably protected since we swept the high, rejected it very aggressively, and also it's not even our data high anymore. It's just a random 1 minute, 2 minute, 3 minute high, right? So there's no reason for you to be targeting the high, even though you do get a 15-minute gap tap and inverse, right? On paper, pretty much everyone's going to take this because, look, it's a data high, and you get your inverse and you give your gap tap and we're bullish, everything aligns. But what you failed to do is your drawn liquidity actually clear enough for you to take the trade to it, right? Are we actually going to go here? Do we need to go here? No, we do not. Why? Because this 15-minute hourly every single time frame told us that this CPI wanted to open higher over here, take out the highs, and then now reject and start continuing lower back down to our data low, right? Maybe if this data wick was all the way up here and we didn't take it out ever, and we immediately went to data low, then we could definitely see data high, right? So we're gonna go over one more trade, and it was a trade I took yesterday on January 29. Looking at the daily time frame, this is where I'm gonna start looking at ES. Why? Because damn, we got pretty. Hold up. Yeah, January 29. What the heck happened there? Okay, on ES, if you look at ES here, ES, we had taken out, what did we take out? We took out all-time highs, created this SMT, right? If we want to see this, if this SMT is going to hold, what is going to happen? What is going to happen? We're going to displace the opposite way and start disrespecting the opposite structure, right? Daily time frame, we have this daily gap that we want to fill around here. So that ESMT with ES, ES disrespected it, and we started to come back down lower to rebalance this range. Very, very simple, right? 4 hour, we start rejecting, we're not displacing, we start accumulating in this little range. What do we want to see? At least we want to see these next lows get hit, right? Before we go back higher, we wanted to see a rebalance to go back higher, right? We did definitely get a bigger move down than I expected, but it's fine, right? We start overnight, we don't do much, we kind of just chop around, stay in this range. We failed to take out these highs, we just make a higher low, a lower high and another lower high, right? Not taking out these highs, right? So it looks like we just want to generate liquidity and come rebalance this range down to this daily bullish for value gap, right? So going into the morning, on the hourly time frame, what do we have? We have these gaps, right? All these gaps are pretty much gonna hold us to go higher if we're actually gonna go higher, right? What do? We completely run through this and do absolutely nothing, right? Going on the 15-minute time frame, we're just doing the exact same thing, generating liquidity lower and starting to continue this trend on going lower, right? Follow the trend, right? We do have this low, and yeah. So going into the morning, I was on the 5-minute. Watch this 5-minute. Okay, I was like, let's see if we can retrace to one of these gaps and get some rejection out of it to continue lower, right? First candle opens at 9:30. Let's go right here. It's going. I was on the 5-minute and the 1-minute. Like, I want to see how we react out of these highs, right? See if we're gonna make another higher low. A lower high, right? To then continue back down lower, right? Take some people out in the morning. What do? We instantly wick this high, get displacement out of it, right? This is where you can take advantage of being more aggressive with your entries, right? You don't always need to wait for a very, very strong continuation flip, right? 5-minute tap or any of that big retrace, because you're not always going to get that, right? Literally in a couple minutes, this plays out, right? What did I do? I was on the 1-minute and I just saw, actually I scaled down to the 30-second, but I don't even think I can go on the 30-second, can I? No. Okay, well, whatever. Create this move up, and then we instantly wake that high and displace, right? Now, what I was waiting for to see if this upwards candle will be made as an order block, right? Entered pretty much. I don't even use it. I don't even say it. I don't really be using order block like that, but I was just wanted to see if we were gonna continue this or continue the bearish order flow, right? And what do? we get this small displacement through this candle, and that's enough confirmation for me at this point, right? Because every single thing already aligns, right? Right, we need to rebalance this range. SMT all-time highs, we're rejecting it, creating lower highs, right? Tap this 15-minute gap, instant rejection, right? Pretty much paying off this 15-minute wick. See this 15-minute push back down, and yeah. So that's where I took my entry. Took 2 contracts, stop loss at the high, around like 1,500 to 2K risk, and yeah, just pretty much held it. Once we took this low, I didn't want to see rejection, and I went break even almost immediately, right? We got that strong displacement, went break even, let the rest go down, right? You're not really expecting a what's it called? A big retrace here, right? Since it's very early into open and we have all this volume just pushing us straight back down into this daily gap. And there you go, take profit gets hit. Very, very simple trade. This is where you can be aggressive because every single thing aligns with you, right? Because you're not really going to expect a continuation in this leg, right? Because you just have to use a little bit of logic sometimes, right? There's no where for us to have a bigger retrace, right? This was a retrace into this 15-minute gap, right? We took some people out of the market and going into longs, and we instantly flipped the opposite way. Very, very simple trade there, right? Getting that morning volatility straight to that daily gap, right? You could have caught maybe another trade. I think we get a flip here, right here. This wasn't my favorite just because we tapped the daily gap, but if you do look at the 4-hour candle, right, we do have all these lows here, and since by the way we're moving, you can still take this just because we want to see this next candle expand us lower, right? And we're about to open up pretty much the new 4-hour candle, so we want to see this continue running lower. You could have gotten break even there, right? But we retraced and then continued this for like a couple hundred points. We moved a lot this day, right? And after this drawn liquidity is hit, you probably don't want to be taking another trade. Pretty simple on that one. More discretional if you want to say it. But yeah, that should be it, right? Pretty much just talking about how you can avoid these trades, filter out the bad ones, right? Filter out the ones that you're not willing to put on risk, right? Even though if it shows up, you still want to be able to know when you're comfortable putting on risk and when you're not, right? The trades that you don't hesitate on are usually the best. Like this aggressive entry is a very good trade just because every single thing aligned with it, right? No hesitation on this. You just entered, right? Had a perfect drawn liquidity and it played out. But those other trades where you're like, okay, this high is getting rejected and there's a chance of me getting stopped out, right, or getting chopped up, then that's when you need to listen to yourself and not take that type of trade, right? So it's okay to miss out on an entry, and yeah, and you don't always need to be really, really picky on your entries. You just have to have a very good, strong drawn liquidity, and just look at the candles on the higher time frame, and just you need to be able to recognize where we are in the range and if we're actually going to expand in that part of the range, right? If we're super high up in the range, then you can obviously expect us to not expand right here, right? We can still retrace, right? We're probably going to need a higher time frame retrace before expanding, right? You need to look at the higher time frame for you to catch these lower time frame moves, right? That's it.
Order filled.